was last on with this market analyst on Friday when we got that blowout jobs number. Remember, we've been talking about it. I still can't stop talking about it. But this analyst, he's a planner, right? He sees a lot of people and talks pension, retirements, and the likes. Well, he's also been pretty good at nailing these numbers. And he'll laugh when I say that he's been caught usually betting on the over, right? Something bigger than we think. But with the plans for trusts and retirements and the balance, he's got to be on top of what the Fed is up to and what might be the next move in interest rates. With that big number, you could tell by Chairman Powell's demeanor this weekend on 60 Minutes that big numbers like these aren't really going to help his cause, right? And ever since that December the 13th dot plot bomb that he left, where he totally reversed course on rates and announced 2 or maybe 3 cuts this year, the data since then has not really supported those comments. And now that we've had a weekend and a few days to think about that big number, I wanted to touch base with this analyst and see where his head is at now. Please welcome to the show, Craig Bolanos. He's the CEO and co-founder of the Wealth Manager Group in Chicago. Thank you very much for being on, sir. We were on together when that thing came out. You actually broke it on the radio show that I was on. And I just wanted to get your thoughts. I mean, it just seems to me that since that December 13th U-turn, when Commissioner Gordon rang the bat phone and said, cut, and I'm being facetious, obviously, but it seems as though that nothing's really added up on the side of cutting since then as far as government data. What say you?
Well, here's what I got to say. That report on Friday had a little bit of something for absolutely everybody. But at the end of the day, it was hot on the surface, but probably a little bit fluky when we actually break down the numbers. So what does all this mean? That January jobs report is always fraught with revisions, seasonal adjustments. This one's probably more disconcerting than most when we talk about household surveys, various other components. But at the end of the day, here's what I know. Thank heavens we didn't print like 250 or 260,000 jobs, because then that number would have been so much more believable.
Yes.
And it would have created additional weight in that 60-minute interview that happened this weekend. All this did was cement that we're not cutting rates in March, but it really hasn't moved the needle from doing things in May. And let's be honest, in the world of finance, what's the difference between March and May for long-term investors? Not much. It just is what it is.
All right. So I think I've probably talked to you about this, and maybe I haven't, but I just want to kind of go get your point of view. When we talk about inflation coming down, that just means prices are going up at a slower pace, right? We still have inflation. The Fed,
we still have we have inflation. We have shrinkflation. Yeah. We have every form of things. I mean, it just costs me more money. I know this, but the rate of change year over year, those things are coming down.
Right. So hold on. So right. And so you could say that, all right, what they're doing as far as raising 11 times is doing the job that they'd like it to do, right? It's mitigating inflation, or at least higher inflation. It's mitigating that. And so then as soon as we start to get to this point where people say, okay, inflation's coming down, we can start cutting again. I can't sign up to that. I don't understand it, because I would say this: if the thing I'm doing is working, I'll just stop doing more of it and let things stay the same until I start to see some weakness, and then I might cut. But because I've finished the job doesn't mean I might start cutting again, because that'll just make the problem come back just as fast, right?
I think the Fed just wants to stay ahead of it, because at the end of the day, what this is all really about is about wage pressure, wage inflation, and we need to take some of the excess, I'm going to call it excess employment numbers, out of this economy. And the companies are already starting. We've seen the reductions in force. I would even argue all of the return to work announcements that have happened, UPS coming back on March 4th, Exelon bringing everybody back into their offices. It's designed to actually get some people to cut at the end of the day.
I agree with that.
Now, I mean, so that's just easy, right? That being said, to your point, why is the Fed trying to get in front of this? Why are they trying to forecast this slowdown? Listen, they got a good track record. They want to keep the party going. I think the rate cuts, we've talked about it almost ad nauseum, this idea of 6 rate cuts. No, it's some type of a crazy wish list. It's like the same wish list that the senators wrote to the Federal Reserve. It's not going to happen.
Right.
That being said, are we going to get anything in March? No, we're not getting anything in March. Do I think we're going to get anything in May? I won't be surprised that we don't even get a cut in May. But once we get to the second half of the year, on the back of those loan loss provisions in the banks, the higher credit card delinquencies, the fallout in some of the commercial real estate, a true slowdown because everyone's money tree ran out of money, meaning the money tree's not dropping leaves anymore. I think it will be accommodative for the Fed to give us a couple of cuts to keep this party going, and stocks will be responsive. It's a good setup through 2024.
Even in front of an election, they'll cut them, huh?
Yes, even in front of election, they will cut them.
I mean, that's dubious territory, I would say, because they, generally speaking, don't like to do that.
No, generally speaking, they don't like to do that. But I mean, you and I talked about this on your same TV program a couple of weeks ago, when we finally had, here, I just want to say this. It's such good news. Remember, don't fight the tape. Don't fight the Fed, right? New highs tend to make new highs. All those trader axioms are still here. They're in play. And at least we know the next move is cutting rates, not raising rates. I just know this, for all the investors out there, this market is priced for absolute perfection. I'm bullish that stock prices can follow earnings this year again, not 245 on the S&P, 235 on the S&P. That's single digit growth. But boy, we got to have a whole lot of things go right and nothing go wrong. And there's a lot of time between now and the end of the year.
Okay. I'm Charlie Brown with you on that one. Something usually does. All right. That's awesome stuff. Thank you very much. Craig Bolanos, he's the CEO and co-founder of the Wealth Management Group in Chicago. Now, you